this game, my starting salary is 9,500 and my total expenses, these ones, add up to 6,900. So on every payday, after subtracting all my expenses from income, I am left with 2,600. At the start of the game, I have $400 in cash. I don't have any assets on my balance sheet, and I have all of these listed liabilities. I have a home mortgage of $143,000 with monthly payment of 1330. Then I have car loans of 15,000, trade cards 22,000, retail debt 1,000%. All of these have varying interest rate, and these are the monthly payments listed. If you multiply these by 12, you will get your total annual payment for all of these debts. Alright, let's start the game then. Okay, so I came here, these green ones. If I land on these green handshake ones, those are for deals. So the game will offer two kind of deal. One is small and the other is big. The small one generally costs less than $5,000 and the big one costs $6,000 or more. Let's start with a small one. Stock low inflation leads to high share price for this long time maker of medicine. Now I'm going to pass it. So what I want to do is, the game basically is, this is our everyday life, essentially the rat race. We need to skip this and ends up in this big race which the elite or the top 1% are playing. This is where you own multiple businesses and earn a regular income through those business. According to this game, the way to do that is build up a passive income which will exceed this total expense. So right now, if I had a passive income of 6,900, I wouldn't need to be relying on this job anymore, and I could achieve financial freedom, and I can escape to the big race. Okay, let's roll the die. Alright, so I reached my payday. This is a payday, this is also a payday, this is also a payday. So essentially there are 3 months in full circle. 1, 2, 3 blue ones. So what happened here was, I got my total income and then they subtracted all of these expenses. That includes taxes, mortgage, all the car loan payments and credit card payments and retail payments, and in the end I was left with 2,600. So total cash in my pocket right now is $3,000. And then I have selected a deal. So the deal is, you are offered 25,000 per unit for all units in apartment house of any size. I don't have any asset of this kind to sell it to them, so I'm going to skip it. So before rolling the die, what I am going to do is, right now I have $3,000 in cash and I have this retail debt of $1,000 in which I am paying $50 of uh, monthly interest. So if you multiply this 50 by 12, it will end up as $600 of annual interest. That is very high interest rate of 60% on this debt. So I'm going to pay and clear this off right now. Pay, select retail debt, loan amount 1,000, pay off your loan, pay, done. So see that loan is gone and that retail payment of $50 is gone from the list. So my expense has now gone down by $50. So my payday and leftover money has gone up by $50. It was 2,600 earlier, now it is 2,650. So another month has passed and now I have $4,650 in cash. I could take up a small deal or I could end up paying this debts one by one as the interest rate is quite high. If you multiply this 300 on the car loan by 12, that is 3600. That is divided by 15,000 is 24%. And if you take up the credit card debt, 660 into 12 is 7920 divided by 22,000, that is 36%. So essentially on the car loan I am paying 24% interest and on the credit cards I am paying 36% interest. Let me quickly calculate the mortgage payment interest as well. 1330 into 12, that is 15,960 divided by 143,200, that is 11.16%. Okay, if I buy this house, I don't have to give any down payment. This house is worth 50,000. I will get a mortgage of 50,000, but it has a negative cash flow of $100. So it will reduce my income to $9,400. I don't want that. Okay, for this mutual fund, the trading range is between 10 and 30, and I am getting it at $10 right now. So I'm going to buy some of this. Not that much. See, so my cash has gone down by 3,000, and I have 300 shares of Grow for Us mutual fund at $10 a share. So the total investment is $3,000. If it goes up to $30, I will be able to sell this for $9,000. So I bought 400 shares of OK for You company. Now for this company as well, the share price has gone down to $5 each and the trading range is between 5 and 30. So I'm going to buy some of this as well. Now if you take a look here, I am left with only $950 of cash, but I have a lot of shares right now, and if the price goes down further, I won't be able to sell it. But if it goes back up to the higher end of the trading range, I could sell and make some money and pay off a couple of these loans. So in this one, for this offer, I have to pay down $2,000. That will go from cash. The total cost of the house is $45,000, so I can build up an asset of $45,000 and I will get a mortgage of $43,000. But the positive thing is it is paying a monthly cash flow of $250. So for a year that will add up to $3,000. So I can recover my $2,000 within a year and I will have an added $1,000 on top of that. It's a positive cash flow. So let me buy that and I will show you the change in my financial statement. See, there is the asset of $45,000 and then I have a liability of $43,000. My total income, which was $9,500, has now gone up by $250,000, which is the positive cash flow from rental income per month, and that $250 is now considered as a passive income. But my expenses remain the same. So therefore now, rather than making $2,650 each payday, rather than saving that amount, I am now saving $2,900 every month. So for this company, what it is saying is because of high inflation worries, the share price has gone down to $10. I already have 400 shares of this company. The trading range is usually between 5 and 40. It is towards the lower end, so I'm not going to sell it right now. I have an opportunity right now to either buy more shares, sell the existing shares I have, that is the 400, or pass this opportunity. I'm going to buy some more of this because it's towards the lower end. So right now I'm left with just $600 in cash and I have filled up a lot of these shares and a real estate. I need to build up some cash for emergency purpose now. Okay, so this yellow ones are payday. Whenever I cross this yellow ones, I get uh, this amount 2,900. The blue ones are some sort of expenses. The green ones are deals. So whenever I land upon a uh, green slot, I get these deal opportunities. The yellow ones are payday, and rest everything is some sort of money expense. This is for child, this is for buying something. Again, this is using your credit card or something. Once again, I am going to buy some of these shares. So I bought only 300 shares, which costed me about $1,500. I wanted to save some cash. Right now, I have 2,000 for emergency purposes. Oh, yeah, see, this one is for baby, new baby. So now I have a baby, and my child expenses have gone up by $480. So this total expense will go up, and payday will the savings on the payday will come down, income will remain the same. Child expenses extra $480, so my savings have come down by that amount. So in this deal, I have an opportunity to invest $5,000 in a small company. Maybe in time, if the company does well virtually, uh, then a large buyer can come in and give me a good offer uh, for this company. But since I have only $7,000 left in cash, I'm going to avoid this right now. All right. So for this company, okay for you, I have 400 shares and 100, 500 total shares, and these are going to split 2 for 1. So in total, I will have 800 of shares on this line and 200 shares of okay for you on this line. Total are 1000 shares. See, 800 of this and 200 of this. Certificate of deposit that they are offering me $20 cash flow for $4,000. So $20 is essentially $240 per year. Divide by 4,000, that is just 6% interest rate. No, I can rather buy shares worth $4,000 and I will be making a lot more money on that, so I'm not going to buy this. Okay, for my T for you, I have total 700 shares and the cost has gone up to $30, which is the higher end of the trading range. So I'm going to sell it all, and total I will get $21,000 in return. Now I have total cash of over $30,000 and I can retire these loans. Which one should I retire? Credit card is at 36%, card loan is at 24%, so I'm going to retire credit card because I'm paying more interest for that. See, this entire 22,000 credit card loan is gone, and that interest expense of credit card is gone, and I'm left with cash of 8,740. Now that extra $660 I was paying for credit card, that expense has come down and my savings per month has gone up by that amount. So I will be building up cash a lot faster now. Oh my god, I pressed buy without thinking anything. I got this coin for $500. It was just my sleepy fingers. Another child now. So my child expense will again go up by $480. I just avoided that credit card payment of $660. I thought that would be my extra savings, but now I have a second child, and so the expense for that will go up by $480 in perpetuity. I'm going to buy this. I am downsized. I lost my job, so uh, pay a full set of your expenses and lose two turns and charity. So I would have to pay 7,150 out of my cash. This once again, you see this blue one, it's a shopping expense, just like this one. So every time I land on this slot, I will have to pay some sort of money. This is $350 for some shopping. It will go out of my cash. No. So for these shares, this thousand shares of OK for you, I'm going to lose half of those because the company has gained massive losses. So now I have got a lot of shares at very low cost per share. If the share, if I get a deal where the share prices are high, I can actually make up a lot of money and retire this card loan. Yeah, I don't have enough cash to donate right now. I will donate later. So this company right now it is selling at $30. The trading range is between 5 and 40, so it is near to the higher end but not absolute high. So I'm going to sell some of the shares and accumulate some cash and pay off this car loan. I have this. So I had bought that gold coin by mistake for $500, I think it was. I ended up selling it for $40,000, so that's some profit, isn't it? So now I have a cash accumulation of $62,000. I have some shares, so next time I get a deal, let me try one of the bigger deals. I can quickly add up some passive income with the bigger deals, because with the smaller ones, with the houses I have bought till now, I have this 250, 100 and 200, total $550 of passive income. That is that is quite an return on the down payment. Let me calculate that again. 1,500 per month into 12 months is 19,200 divided by 20,000. Okay, this is 96% return in the first year itself. So I'm going to buy that. So I added a passive income of 1,600. My total income went up and my payday savings went up as well. And I have an pinball video game arcade for $100,000 with a mortgage of $80,000. don't have any shares of this company, but I've bought a lot of shares of these companies. That is a lot of risk. Again, yes, I have shares of this company, 2500 shares. I'm going to sell it all because the cost right now is higher than the usual trading range. I am rich. I am rich. I have $131,000 in cash and all of these shares and houses. I want to pay off this home mortgage. Now see, now every month I am saving $6,450. Yes, donate. And I get some extra turns for donating that amount. So I'm getting the list of interest on all of these 4 3 by 2 houses I have on this one, second one, that is $50,000. So if I sell this one for $135,000, there is a mortgage of $50,000. So I will get a net benefit, net gain of $85,000. That is 100% rate of return in 1 year on my down pay, and from there on everything else is uh, just profit. So I'm going to buy this, and my passive income has now gone up to over $5,000, and my total expense is down to $6,000. So the moment I cross this $6,000, I would be free, financially free. And see all of the assets from which I'm getting this passive income. There are two 3 by 2 houses, one arcade, one multiplex, another 3 by 2 house, and a laundromat. Yes, I will pay $100. No worries with that. Okay, see, my passive income has now gone up to $6,300. I have all of these assets. I have liabilities or a mortgage on all of those. My expense is limited to $6,000 per month, and my passive income is above $6,000. So at this stage, I was saving $9,800 every month. But since my passive income is greater than my expense, I don't need this job anymore and I can retire. I'm out of the rat race. See, so this thing, it was rotating here in the rat race, but now it has landed on the bigger circle. It's not a circle, but on the bigger path. So from now on, it's all about accumulating as much money as I can to buy my dream. What I have to do is, if my dreams comes up there, there will be a cost and I can buy that if I have that much cash, or I can increase my passive income by another $50,000 and be free and be set free. Now this is gambling. I'm not going to take it. Otherwise, if it shows okay, this is three or higher. It could be three, four, five, and six. Let me try this. See, I shouldn't have taken that. I lost $150,000 in cash. Okay, so this was my dream as set up at the start of the game. I can pay $100,000 in cash right now, and I will achieve my dream, or I can pass this and continue accumulating these businesses. And if this passive income goes reaches $680,000, then I will win the game. So I'm going to buy this right now because I have enough cash left in the kitty. Yeah, I won the game. So that's all for this video.